I blew up my computer a few weeks ago, as well as been traveling a lot, which is why you guys haven't seen me recently here on the YouTube channel. But you guys know I feel guilty about not giving you a video, so wanted to come back this week and give you what's close as possible to a weekend trading edge video. No bells and whistles, no intro music, no fancy graphics, anything like that. But what matters most about trading is just you and the screen. And I've kind of been humbled over the last few weeks as I've been away from my normal system with all my monitors and all the flashy stuff, and have just been trading from my laptop and a little kind of side monitor. And it's actually been kind of relaxing, right? I get away from all the other distractions and I can just focus on the charts, which is what matters most for the business. So if you're someone out there and you don't have kind of the big screens and the fancy setup that you see on many of these YouTube videos, that stuff is cool. It can make life easier for you, don't get me wrong. But what matters most in trading is you have, just something that you can view your platform on, something that you can do your analysis on, and something that you can use to execute trades. And sometimes it's cool to go backwards. So this week I've got a few pairs I want to take a look at. We're going to start here on the pound dollar. Pound dollar here on the daily has been going through a massive period of consolidation, right? If you look really the end of the year to where we're currently at, we've just been going up and down and up and down, bouncing back and forth. Now, if you're someone that trades advanced pattern formations, Gartley's bats, ciphers, butterflies, you've been making a killing in this zone. Trust me, I'm someone who trades that type of stuff, and I've been making a killing with advanced patterns lately. Knock on wood, probably jinxed myself. But today we actually have a different type of trading setup for us. It's going to be a simple structure-based trade, right? So we're going to go down to our 4-hour chart, which is our lower time frame. And you can see when we have a channel like this, and I don't have any type of bullish or bearish bias as far as breakout, so I'm trading it more like a mercenary from point to point. What we want to do is we want to establish kind of 2 points, right? We want to find our levels of structure, establish our high water point or watermark, and our low watermark. And you can see that we're coming right down into our low watermark right here, where price has ran into previous structure 1, 2, 3, 4, 5 times right here. We have a little bit of a violation of this recent spike due to the the news that came out this past Friday. By the way, hats off for you guys that survived what was probably the most busy 2 weeks of high impact news events I've ever been through. I don't know if it's because of how the calendar lined up, but we saw Bank of England monetary policy, ECB monetary policy, FOMC monetary policy, Japan monetary policy, Canada monetary policy, non-farm payrolls. There's a lot going on, GDP. So hats off if you survived that. But what we're looking for right here, is a basic structure trade, right? You can see we ended the week with a big move to the downside. We've ended the session Friday with an inside bar, right? Which means consolidation, right? This bar completes completely within the previous bar. And what I would expect is some sort of relief. You can see we started making a double bottom, which is a classic pattern formation. We've come down. Price action has gone oversold here on the RSI, dipping into that red. We've bounced up here. Let me change this color, make it a little bit easier for you. And if we were to come back down here, get a hold, right? If you're someone that wants, even more confirmation, wait for a specific candlestick, we can have a very nice double bottom pattern. You can look to trade this right back up across the channel. If you're even more conservative, wait for something that's called a 2618, right? We spoke about this a little bit in our Q&A session about different ways from super conservative to super aggressive ways of entering trades. I would put a double bottom as conservative. If you want something super conservative, wait for a 2618 where price action breaks the peak of this potential double bottom, essentially confirming the pattern. Then we get one more retest right here, and that's where you would look to get involved and trade it back up. So no matter how you're looking at it, awesome opportunity here on the pound dollar for a simple structure-based trade. Euro yen back in the spotlight this week. You guys know me and the euro yen. I got big glossy eyes and I'm blushing because this pair has been amazing over the last calendar year. It's the one home run trade I've had this year so far. And there's still meat on the bone. I know I've come in pretty much like every 2 weeks and said that, but it's true. There's meat on the bone, meat on the bone, meat on the bone. And we need to take advantage of it before the opportunity is gone. And the most recent move that we've had here on the euro yen, starting on the daily again, is we've come down. We've retraced right back into a previous level of structure. If I just draw a line right here in the middle, when we look at recent structure, you're going to see that we hit previous structure resistance right there, structure resistance right there, structure resistance right there. Finally broke through, right? Once we break through, we look for previous structure resistance to act as current structure support. Price action comes back down, find support right there, find support right there. Very nice 3-bar reversal candle, very nice, or 3-bar reversal combination, very nice pin bar reversal candle right here with a higher close right at the 159 even handle. I told you this pair was yummy, right? It's just so much lining up at the same spot. I never want to say it makes it easy, but this one has been, again, I'm going to jinx myself again. This one has been an easier pair to trade over the last year or so. So what we're looking for here is this, right? Two things. There's a pattern here as well. I think maybe we'll save that for next week. If you're aggressive, you can easily enter on a 3-bar reversal right here, especially if you're looking for a move to our higher level of structure back up at these 163, 164 levels. Plenty of room there. If you're looking for something more conservative, maybe just a move back up to this 160, 130 level or 161 even, you may want to go down to your lower time frame, once again a 4-hour chart, and look for a potential head and shoulders pattern. It's not going to be your classic head and shoulders. We don't have a massive directional movement before this occurs, but if you take a look at this, that's going to be our directional move down, right? Our retracement right here is going to give us our left shoulder, our failed extension, or I guess our extension right here, just shallow extension to structure, is going to give us our head right down there. And then we're currently putting that move, that retracement, deep retracement, right back up to our neckline. What we would look for next is a failed extension down. It doesn't have to be, but typically it's symmetrical with the left shoulder right here. And then we look for a violation of this neckline. Excuse me, I got wild and crazy kids in the background. Working, guys. Said I'm working. All right. Life of dad, right? Not just a trader, I'm a dad, right? So anyway, potentially setting up for a head and shoulders pattern here. So something to keep an eye on. We got everything we want with the RSI as well, continuing to push up. Let's see if we can violate this neckline and get a move back up to, again, 61 is kind of a very shallow target level, but if you're looking to get involved maybe the right shoulder, that's a good one. I think you can easily look for a retest of our highs right here at 61.72s, and then again that other structure high I mentioned on the higher time frame, going back to the daily, for that secondary target at 63 or 164. Dollar yen is an interesting one, and we're here on a daily once again starting off. And at first glance, you would look at this, and if I just scroll a little bit like this, and this tells you how much importance perspective plays in the market. Why you can have 10 traders in the same room and tell them, hey, look at the dollar yen daily, and they'll give you different answers on if we're bullish, bearish, or in consolidation. If you look at it from this perspective, this looks like a full-blown kind of picture perfect bullish trend, right? We have the market ebbing and flowing so nicely. We move up, we retrace, we move up, we retrace, we extend, we retrace, and like, hey, we're going to get a continuation higher. But if I scroll a little bit out some, right, and we ask ourselves, where did our last level of structure come to, right? We call it new structure highs right here. Where did our last new structure high come to? You're going to see that we ran right into a previous level of structure resistance, and we did not violate it. Now, not to get too much into the rules, right? There's plenty of stuff here on my YouTube channel if you want to kind of understand the rules-based way that we teach how to read a trend, and that way you can, understand if you're on the right side of the market at all time and eliminate that big old question mark about what the market is doing. But to keep it simple, because our most recent structure high did not violate the previous structure high, we have no reason to assume that the bullish trend is going to continue. Now, it doesn't mean the bearish trend is going to start, right? That's kind of the big mistake that a lot of traders make. Well, Q, if it's not bullish, it must be bearish. Well, no, the facts are most of the time the market is doing absolutely nothing. It's somewhere between bullish and bearish. Only small pockets of time are we actually in those trends. And this is one of those times where we don't actually know what's happening. We don't actually know if price is going to continue up and retest or break this level. We don't actually know if this is the first maybe retracement that starts a bearish trend, right? We just don't know. What we do know is that the location that price is currently trading at is a pretty important one, right? We are essentially at a previous structure high, just like the, was it pound dollar? We look at this high watermark right here. We're right at the top of this structure level, and the market has ended the week with a high impact fundamental news reaction, right? So it's a little bit emotional. And then we ended it with a little bit of consolidation indecision with this inside bar right here. So again, going down one more time frame, if we can prove that, hey, we're likely to kind of retest this level, we prove that we can hold here, we're likely to get a retest. And that retest, or that brief retracement, I should say, should come to this level right here at minimum. And if we pass that level, could basically go down to really that 147 level. I would say 147.40s as the safest place, 147s or even 146.6 as being other locations. I'll draw those on so you can see it. Here's the 146.6 level right in here. Here's that little inside level of structure, and here's kind of the bigger one. Again, depending on your target taking philosophy, conservative, aggressive, these are three levels you can shoot for after this primary level right here. So another nice structure-based trade, RSI overbought, nice 3-bar reversal. Want to be a little bit conservative, at least that's how I want to be at this level, because we're not quite at the tippy top of structure, but waiting for that double bottom, double top, will give us that kind of reinforced message that, hey, this level is holding and we are more likely to retrace versus extend. Lastly, we're going to go here on the pound New Zealand. I told you guys earlier, advanced pattern formations have been very frequent and have been on fire lately. Fuego, right? So I guess it's only fitting that I show you one that is coming up in the market. And this is a pattern formation that I do not trade because good ones, in my opinion, are very, very rare. And this is one of those rare good ones. So what we're looking at here on the pound New Zealand 4-hour chart is going to be a potential bearish butterfly pattern. We start all of our patterns in order. So we're looking for our swing high to swing low, our impulse leg or anchor leg. This is going to be our X, our starting point. X marks the spot. This is going to be our A, the end of our first move. We then want to bring a Fibonacci retracement on from that swing high, there we go, from that swing high to that swing low. And which Fibonacci retracement level is hit will allow us to decide what pattern it's going to be. A 3D2 knows we can be a cipher pattern. 50% knows we can be a bat pattern or a cipher pattern. Not a B, but you guys get it. Making it worse. A 618 puts us on alert for Gartley. And then what we have here is a hit of our 786. Let's try to B again, which puts us on alert. Oh yeah, nailed it, for a potential butterfly pattern. Now, a butterfly pattern isn't one that I traditionally trade from a philosophical perspective. I understand it completely. It makes perfect sense. But from a philosophical perspective, I guess blend it with a technical perspective. It doesn't kind of follow the things that are important to me in the market. But this particular one actually would be a good one, and I'll tell you why. You see, with the butterfly pattern, we are looking for, and there's a wide range of levels you can trade the butterfly pattern at. We're going to kind of not confuse you with that today and just say we're looking for a 127 inversion. So we're looking at our X to A, our A to B, our B to C, our C to D, all the way up here past the X leg. And this is the part that doesn't stand with me from a technical perspective because, right, the X leg and other pattern formations works as my safety net. And essentially to have something complete above my safety net isn't really safe, right? It makes sense, right? If you have a safety net, you feel safe about something. If you have a safety net with a big hole in it, you're like, I don't really want to, it doesn't really have the same purpose. However, with this one in particular, and this is why I said this is one of the rare ones and the rare ones that are good for me, is that if we look at this butterfly completion at the 127 and we look left, structure leaves clues, we have another safety net, right? Right in this level of structure. And I'm a structure-based trader. So this one would actually give me a very safe place to put stops, because I would feel comfortable. And I know I shouldn't be using the word feel, but you know, feelings are involved in trading. We shouldn't act off them, but they are involved. I would feel comfortable with a stop loss up here because I know I have the safety of structure. Which isn't always the case with the butterfly. So this is a decent butterfly pattern in my opinion. Let me double check. We may have a cipher as well. I know some of you guys are probably screaming at your chart right now. Q, you forgot the cipher, right? I love it when you guys do that. Looks like hold on. We may have 2 for 1 here. I'm measuring this kind of backwards, so don't kind of, We do, right above. So cipher traders, you actually have one right above. Check your data to make sure it's legit, but you're gonna have one right above that B leg slash the X leg of the butterfly pattern. I'm confusing everyone now, I apologize. It's not that complicated, I promise, just a lot of letters. Once you know how to do them and what order to do it, it's really simple. So I don't want you guys getting intimidated by patterns. We literally, when we teach our traders how to trade pattern formations, it's literally a checklist that you follow where it's like, step 1, look for this. If this occurs, move to step 2. Step 2, look for that. If that occurs, move to step 3, right? It is dummy proof, the process you go through. But when you don't know the process, it can get kind of confusing, but so don't get overwhelmed. But yeah, looks like 2 potential pattern formations here. We have a potential bearish cipher completing right here. Your zone's going to be from here up to the top of the butterfly, and then you have a butterfly up here as well. And this is perfect because we just ended the week in our live trading room talking about what to do when you have 2 pattern formations or 2 signals in general kind of in the same location. How do you plan for that? So look at that. We willed it into existence. So hope you guys enjoy. Apologies if the audio and visual quality aren't up to date. Again, I'm doing this from the laptop and not the main machine since it, blew up, but wanted to give you guys something. If you appreciate it, do me a favor, hit that like button, subscribe if you're new. I try to do these videos when I'm not blowing up computers each and every week. And also, if you haven't checked it out already, make sure you check out Trading Coach Podcast, or I guess the Trading Coach Podcast. It's available on your favorite app. One of the top rated trading podcasts out there. I'm humbled by that, which is pretty cool. And I got some cool episodes for you. Haven't been able to produce a lot of the new ones because of the, but I got some good, really, really good trading topics coming up. So make sure you keep an eye out for them once I get my new system built. All right, until next time, plan your trade, trade your plan. Take care. Good luck in the markets this week.